Maverick traders. Welcome out to your market roundup for July 10th, 2023. Corey here with you. Let's get to it. So the markets were pretty quiet today, but they did go up. Dow up 0.6%, S&P up 0.25%, NASDAQ the same. IWM, the Russell Small Caps, was really the big story, up 1.64% today. Oil slightly lower, down 0.5%. Gold flat. As we look at the markets, the daily news, home prices have hit new highs, and this along with stocks rebounding and asset prices generally rising, economic conditions still holding in. We haven't fallen off a cliff, we haven't hit recessionary numbers and so forth, and this is even throughout interest rates continuing to climb. So if you were to look at bond prices, bond charts, you can see just trending lower. And interest rates, of course, move the opposite direction. So rates continue to rise, yet everything keeps chugging along. Advanced decline line, about 70% of stocks advancing today. And the 50-day moving average has improved, about 6 out of 10 stocks above their 50 MA, so a little more bullish, and certainly some broadening out of the rally. Because what we've seen lately is the market has stalled. Now, I called for a bit of a correction. I said, look, I think this is an exhaustive phase. Watch for the big volume spike. Watch for the signal, kind of an exhaustive style candle that says, hey, that's the sprint for the finish line. And what do you do when you get exhausted? You rest. Well, there's two ways the market can go. A lot of times these exhaustions will give back this, at least this last phase, pretty quickly. Or another way you can rest is to just go sideways, and that's the more bullish of the two. Either way, you're not advancing, and that's what I felt most confident about, is that this was kind of an exhaustive run that should have a deterioration of it, or a consolidation, let's say, of that. But I was definitely in this camp. While I didn't think we would continue to advance, I was absolutely expecting a give back, more than what the markets did. They initially fell. I thought we'd kind of do the ABC correction. I talked about that, and it just didn't happen. Instead, we're consolidating really up on those highs, and that's bullish. Give the markets credit because, look, I can't stick with that outlook. That outlook that I had really right here was the turning point. When it gapped up right there, the outlook that I had was broken. And the realization was, hey, instead of correcting down, this is going through a corrective sideways pattern. And that's just the nature of markets. They can do a little different thing than what you had anticipated. Now, for me, that wasn't terrible news because I certainly expected that we had stopped going up. Look at the exhaustion signal. The exhaustion signal was good. It's just, what is the outcome? If you played it where you were aggressively bearish and you needed a big drop, well, those trades would not work out. And I had one or two of those, but really what I had on were trades that would work as long as the markets didn't continue to go higher. And I've done okay with that style of strategy. So this isn't too bad, but it would have been better for me, frankly, had it done the A, B, C correction. Either way, if it had somehow just continued to blast higher from this exhaustion area, well, that would have been a problem. That hasn't happened, but now you have to look at this and go, okay, what's happening? Well, what's really happening is a rotation. Sometimes rotation is coming out of certain things and going into others, right? And they're coming out of really large cap tech. If you look at the Apples and the Amazons and the Googles and some of these names, they've really stalled at this point. Now they're not collapsing, but they're certainly underperforming. Microsoft was down fairly sharply today and so forth. What are they going into? Well, it's sort of everything else. You notice that the small caps, which would be sort of the opposite, the antithesis of this, it would be something that is not big, not as sustainable, not as maybe safe as some of these other companies in terms of potential outcome, but much different valuations, much different numbers. They're coming out of the large cap tech, which led us higher and were so strong for so long, and they're coming into some of these other names. Now, that's why the market's still going sideways, is because the money's rotating but staying within stocks. And most importantly, it really hasn't rotated to other assets because we looked at that bond chart. What are bonds doing? Bonds are spiking sharply lower. So money is definitely not rushing into the bond market and stabilizing that bond market and so on. It would be a problem if money started to rotate out of stocks and into bonds, out of stocks and into cash, out of stocks and into other things. But clearly, that didn't really happen. We've consolidated, but the money has rotated within the markets but stayed there. Now, as we look at the heat map, most of it green, but again, it's these large cap techs where money is rotating out. All of the things that let us higher, as long as you see all this other green, the markets stay flat, but it just tells you how important these stocks are. There's so much more green on this than red, but the red are the biggest size. And so in terms of the S&P, Apple going down 1%, it doesn't really matter that these consumer stocks were up. That's just, this is as big as that, and so they offset each other. And so the market goes nowhere. These went down. Well, it doesn't really matter that this group went up because this and this offset each other. It doesn't really matter that there's a lot of green there because that and that offset each other. And it doesn't matter that here's a big pocket of green because this and this offset each other and so on. And so by the time you're done, the biggest names went down, but most everything else was up. That rotation is happening. So I had it wrong, I would say. I had it half right, but wrong, I would say, in terms of really my outlook, because my outlook was for an ABC style correction. That 1, 2, 3 style correction, and then we'd see where we go from there. Instead, it's just high basing. And give credit where credit's due. If you see money continue to come out of the bond market and such, it's not flooding into stocks because they're sideways again. It's just rotating around. But it's a question of that capital. Is capital going to come out of stocks, into stocks from other areas? If bonds stabilize, perhaps that's something that's bad for stocks. So let's go through some names and some ideas here.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application. Then you'll watch the full-length recruiting video and then schedule an interview with one of our traders. Are you our next trader?
First on the bullish side, here's Cisco. Continues to base up here. Still trading really well. I know we highlighted this one a week or two ago. Continues to work its way higher, and I suspect should go back up towards those highs. So strong, healthy. 52.50 seems like where we're headed here in the short term, and probably a little bit above that. Another bullish idea would be in Japan. So the Japanese equity markets, as you've had these pullbacks, these deeper pullbacks back towards the 50 MA, you can see that that's been an area of stabilization. And what I sort of like about Japan is this little false move. From false moves come fast moves, and I wonder if this was a little false downturn. And now these bears, it's called a bear trap, these people that kind of went, uh-oh, bearish, better hurry and sell, now they're in quite a predicament because just as quick as it dropped, it popped back up. You're still in this uptrend and so on. I think Japan, EWJ is the symbol here on this ETF, could continue to outperform, might be a dip worth buying. McDonald's, okay, don't love the food personally. My kids would still love it, but kind of a cup and handle. So or you can call it an ascending triangle if you want. Either way, this is an area of support. You can see how it's basing under here. Looks like it's headed back up towards 300, possibly up and through that. And that's a psychological level. So we've stopped shy of that on a few different occasions, but it continues to base up here near. I suspect it's like gravity. It's probably going to pull it up to touch that psychological resistance point. Let's go to some bearish ideas. So here's Agilent, symbol A is the stock symbol, descending triangle, right up there towards the upper end. Now, if it were to break sharply higher, all bets are off, but expectation is that we could reverse here, head back below those lows. So one to watch, one to potentially trade. Another idea, Pfizer. You think about how strong the markets have been generally, and Pfizer is making new lows. Maybe another bounce or two in terms of daily moves, but still looks like this thing is going to trade lower, test lower prices. Money is certainly rotating out of that. So I'd give the benefit of the doubt to the bears, and now it's about picking your spot and finding that right entry point. And then last but not least, Newmont Mining or gold miners in general, just not great price action, a little bit of a consolidation. But when you've fallen this far and all you can do is consolidate, just as we said, you've got to give the markets credit where credit is due. They went on a big run, and now they've been able to consolidate and work off that overbought condition. Well, Pfizer's been on a huge run to the downside, and now it's working off that oversold condition and may just spike right back down and make another run to the downside. So not great there.
Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader?
As we look at the markets, they certainly hit that stage 4 exhaustion. However, they have consolidated much of that exhaustiveness away. So unless they turn down here very soon, give that credit where it's due. CPI comes out on Wednesday, PPI on Thursday. We've been talking about this for the past couple of months. I've talked about that June and July were the big time periods where CPI was, let me say, guaranteed to drop. Now, why do I say guaranteed? Well, we knew that last June there was a 1% monthly number, and last July there was a 1.3% monthly number. And so it's not guaranteed, but we had a pretty good idea. Estimates were that June was going to come in at 0.1% and so on. So that's a 0.9% drop in the annualized inflation. You're getting rid of June 2022 and you're adding a much lower number in 2023. As long as the CPI month over month doesn't come in above 1.3% this week on Wednesday, you're going to see a huge drop in CPI again, and we know that's going to happen. Even if CPI came in hotter than expected, let's say it even came in much hotter than expected. Let's say it came in at 0.8, which it won't. It'll be much lower than that. But even if it did, that would be a 0.5% drop. So there's going to be a huge drop in July. We might see a 2 handle. We might be at 2.9% annualized inflation and so on. And this was the area where the good news, I think the markets are rallying in anticipation of a lot of this good news. I would have thought that the first one, the June number, would have been more of where the markets would top out, but they've continued to push even into this July number. Well, I should say they've consolidated well here into this July number. So do you sell on the good news? Because again, we know that the annualized CPI is going to take a big drop. Now, it might not go to 2. It might be 3 something, 3.1, 3.2, but it could. If CPI month over month comes in at 0, it's going to be down in the twos. If it comes in at 0.1, it's going to be down in the twos. So if we get a low number, that would drop down there and start with a 2, and people would say the Fed has done their job, they've won, they've beaten inflation back, and so on. I'm not so sure that's accurate, but that's what the markets have been rallying in anticipation of. But if you follow CPI, you knew these big drops were coming. Now, after July, you're not going to see it's not so easy. We don't have these easy monthly drops where CPI was so high. So just as it spiked dramatically last June and July as those numbers came in, it's going to spike down just as dramatically as those numbers go away. This is the start of earnings this week. So the official start is when large cap financials report, and that happens on Friday. Citigroup, JP Morgan, Wells Fargo, other companies reporting, Delta and Pepsi and United Health and so on. So plenty of things to watch and pay attention to. But this is the start of the new earnings season as well. Hope you enjoyed the market roundup today. Have a great week, everyone, and we will see you next time.